Good afternoon. Thank you so much for spending a few moments of your time with me today. My name is Jason Rowlett. I am the founder and CEO of 4Token. 4Token is a news, media, and data publisher that is dedicated exclusively to RWAs, to tokenized real-world assets. This is an exciting and exploding market. It is said to be valued at anywhere between $2 and $16 trillion by 2030, according to publications like Forbes and McKinsey. This exciting new field, this new market, is what we cover as the tokenized economy. These tokens are, the ones that we cover are the top tokens by market cap, the top RWAs by market cap, that being $10 million or more, with the exception of a few by sector. And what we do is we report on the various subsectors: agriculture, energy, treasuries, lending, precious metals, and we look at what is happening in those sectors, who are the biggest players. And today I want to talk to you about the RWA edge, because I believe that this particular element of investing, RWA, tokens that are backed by physical assets, are indeed the most substantial and significant chapter, ground-shaking innovation in the history of finance. And I don't say that lightly, and I'll show you why. Let's look at the case for how they can help with risk management. RWAs, if we look at the history of finance, you've had the South Sea bubble in 1711. That was the first major stock exchange. You've had, in this beautiful country, tulip mania, looking at value beyond traditional currencies, and the East India companies over the last about 1600, both the British and Dutch types, where you had corporate finance and global trade-backed investments. Today, you have the latest in this long history of traditional finance, RWAs, that are now bridging those traditional assets, those traditional markets, with the efficiency of blockchain. What does that mean? Well, if we look at this next exciting chapter in financial innovation, we see that conventional risk management relies mostly on the diversification of assets: bonds, treasuries, commodities, precious metals, agriculture, et cetera, et cetera. What that does, and has done for centuries, is leave out certain elements such as liquidity, transparency, and it does not allow for fragmentation. This is why I say this is so significant for today. RWAs are now allowing traditional investors to invest in an asset twice, both the traditional asset and its tokenized asset counterpart. Never before in history has this been able to be done until the advent of blockchain technology. We can see markets like real estate, private credit, essentially illiquid. Transparency, valuations can be opaque, if not lagging. Fragmentation is not even possible for things like buying a square foot of a house in traditional real estate. But you can do that, such as very poor countries. People are buying a square foot of a home in Beverly Hills, a company in the United States, Bonfire Dow Services, those kinds of investments. Moving ahead, this all culminates in what I have coined as the double pedigree investment method. This allows for the layering of tokenized RWAs with their traditional asset counterparts to be invested with together, and therefore you reduce volatility and you enhance yield. You also expand things like accessibility, liquidity, this opens up an entirely new and heretofore an entirely restricted field of investment made possible by RWAs. You can both, as I said earlier, buy the traditional asset and its tokenized counterpart. That allows you to offset the downside of one or the other. It allows you to come in almost instantly with one or the other at the optimal time. It allows investors to essentially give themselves a downside guarantee that they can both utilize with, such as this example here. This is taking this is physical silver, the blue line, tokenized silver, gray line. This is since January 2024 to January this year. For example, tokenized silver dropped in January while physical silver rose. Now, what does that mean? That means that you can counter your investment with the same investment on the tokenized side, and vice versa. So you can protect this investment with this investment, and vice versa. When this one drops, this one rises, and your principal capital that you invested can be controlled, managed. That risk can be managed a lot better. Again, never before has this been able to be done until the advent of RWAs. Moving forward, a couple more examples. This is gold. Again, the top three tokenized gold tokens, Tether Gold, Pax Gold, and Q Gold Quorium. The blue line is traditional gold. You can see as you go along here over the past year where you can get in and out. You can have much more accessibility. You can get intraday highs and lows. You can get in and out at the optimal time, real-time data coming in, coming out, as opposed to traditional gold futures and things like this that are slow. They can be, there's a lot of lag time. When those things happen and the market reacts emotionally, as it usually does, you can control this a lot better by, again, purchasing a tokenized gold coin. Then you can mitigate the risk that you have in both the tokenized asset as well as the traditional asset. So you're playing both sides of the same asset. Another quick examples here is agriculture over the last year. This is wheat, corn, and soybean. This is very low. This is both Landex and APFC, two agriculture tokens. Yes, a very, very fractional valuation, fraction of a dollar. But again, if you want to get out of this risk, then you can dump this and reinvest it down here where the price is much better without totally dumping the agriculture commodity entirely. This is what, again, RWA provides. Moving forward here, we have, this is the lending sector. Again, all this data is from 4token, 4token.co, you can find it. We have subscribers that watch this. We have this in real time. A lot of these charts and graphs are available. Here are all the top lending tokens. Again, you can just isolate those. You can look at them and compare them to traditional lending. Again, the key benefit, it allows investors to maintain their exposure and the benefits of traditional assets, as well as benefit from the blockchain-based enhancements of liquidity, accessibility, transparency, as well as yield in the tokenized market as well. So where there are blind spots in the traditional market, those have been opened up and illumined by RWA, by blockchain technology. Lastly, as we wrap up here, the tokenized RWAs, it is not just an emerging trend. It's not the latest fad. It's not your great new beautiful NFT, but it is indeed it's earth-shaking in terms of global economics. There are multiple monetary authorities, Singapore, Hong Kong, are all implementing tokenization. Huge banks, JP Morgan, Goldman Sachs, the Bank of England, all of these are taking on both buying these tokenized assets and holding them, as well as utilizing and building out blockchain infrastructure so that investors can buy from them. And we're in early days. It is now that early adopters can really get in using, again, what I've coined the double pedigree investing method to gain the first mover advantage in these markets. Again, never before done or been able to have been done because we did not have the ability to physically or even legally purchase two sides of the same asset. But you can do that with tokenization. You can do that with RWAs. If you'd like to know more, I have this ebook free on 4token.co. You can grab it there. Hopefully the QR code works. If not, just 4token.co/book. And you can find it there. This is an amazing new technology. RWAs are, in my opinion, the leading force because they are backed by physical assets that the traditional market understands. That's why they will be adopted. That's why the valuation over the next 5 years is so cool. So, thank you all so much for your attention. I appreciate your good attention today. And if you have any questions, you can reach out to me. jasonrowlett.com has all my links as well. And 4token.co, newsletter, podcast, news all about the RWA markets. So thank you so much.